Hi guys, welcome to the live stream. Just watching President Lagarde at the moment. Just going into the Q&A at the moment. Euro a little bit unchanged. We're closed higher on the hour. Let me turn that music down. Basically talking about how tariffs are going to impact growth, which is, not a surprise. This is why they're pretty much cutting rates at the moment, especially if they get hit with a 20% sort of tariff as well. And if that kind of holds weight, then, especially Germany might have to look elsewhere in terms of shipping cars and whatnot. So I hope everybody is doing well. Give everyone a few moments to come in while I'm just kind of watching the press conference. Hi Dan, hope you're well. Ratish, good afternoon to you. Right guy as well, welcome. Vincent, hope everybody is doing well today. I hope everyone has had a good trading week. Slow trading week for many, I guess. For me in particular, it's been pretty slow. Not really had many setups, to be honest. So just kind of been chilling a little bit, to be honest. I don't know if you guys can actually hear this. Can you hear? I don't know if you can hear the audio from the computer. No, can't. Very slow. Okay. I don't know if you could listen to this while I was listening to it as well. I'll move it to the side then, and I'll just keep it in the background while I'm talking to you guys. We obviously get a throw on adverts as well, which is annoying, but all right, I'll listen to that a little bit later. Hope it's good news from press conference. Currently long euro pound. Nice. Yeah, I was actually watching euro pound. We actually broke out of the level here, didn't we? This kind of longer term sort of trend line. I was watching this daily chart, looking at that kind of lower time frame sort of reversal potential here. Still technically making that kind of you could argue that this is almost like a head and shoulders pattern. I think if we break into a new 4-hour high, that would be a good opportunity to look for some longs. Just keeping an eye on this now. We've broken back above the 50 moving average on an hourly time frame. We have had that kind of change in trend now, which is nice, and we've come back and we've kind of found that support again at the moment. So I'm watching this on a 30-minute time frame, and I'm looking for, again, just kind of, can we get the kind of things stacked in our favor? No audio. Is that from me, or is that just no audio from the press conference? People, can you hear me right? Let me know if you can hear me. Hopefully it's no, that's from the conference. Okay, cool. I was going to say, we can hear you. Okay, brilliant. I thought it was going to be one of those things again when I'm going to have to reboot computer, clean all the junk and everything again. Yeah, so basically you can see that we're kind of downtrending here on the 30-minute time frame. So if we can kind of break this trend, maybe something like this, that'd be a nice entry for me. So I'll be keeping an eye on that for now. 4-hour time frame. So it was still technically, although we kind of broken that sort of nice trend line resistance, we still technically are making lower lows and lower highs here. So there could be a chance that we revisit these lows. Maybe we'll get that kind of turning point then, or it could easily come back into the 84.50 before trying to push back to the upside here. But we'll see. I mean, there wasn't a huge reaction really from that rate announcement. Honestly, that was largely expected. I think there was 100% chance that they were going to cut rates. There's the narrative at the moment in terms of the EU is pretty simple to digest right now. And many central banks will be walking a very similar line right now. There is external risk from tariffs. If tariffs are implemented aggressively, that is going to impact every country's growth, even the US. It will impact their growth as well. So, we've seen the hand that Trump is playing right now, and it was just essentially a big negotiation tool, wasn't it, to try and bring countries to the table. Obviously, there's been reports that Japan have opened up meetings now and have had meetings with the US, and I think that's a very important meeting to go well. Whether it does go well or not, I think is still yet to be seen. I did see some reports this morning on Forex Live about Japan. So let's see if I can find that headline. Because Trump has been posting again today on Truth Social. It says every nation, including China, wants to meet. So Trump basically had a very productive call with President of Mexico yesterday. Likewise, I met with the highest level Japanese trade representatives. It was a very productive meeting. Every nation, including China, wants to meet. Today, Italy. So again, just kind of reiterating that fact that these trade tariffs have now caused these kind of moments where countries are coming together and meet with Trump at the moment. But we'll see. We'll see if there's any actual progress there, because I think that's what the market is almost waiting for now. And it's honestly quite interesting, isn't it? Because we've had some really interesting macro data that's come out, but the market's largely ignored it. So if you have a look at what's happened today, obviously we had the ECB interest rates. Now, usually that would cause some real volatility. And the euro hasn't done a lot. The euro hasn't done a lot from that. Whether there's something said in the press conference, and like I said, it's because every central bank at the moment is walking a very similar line. There's expectations of lower growth, inflation potentially spiking, because each central bank now is in a very tricky predicament because there's low growth on the horizon, right? But there's how do they stimulate low growth, right? That's through, and they've got kind of two tools really, haven't they? They've got interest rates and then they've got the printing machines, right? So they can either turn on the printing machines and basically bring in quantitative easing, right? The problem with that is it will no doubt spike inflation, which has obviously been the story of last year. They don't want to spike inflation. But, you know, if this situation, let's say the situation between the US and the globe continues, and we get this narrative of, you know, Trump's not going to back down from, or he's not really going to give other countries what they want in his terms of negotiations and deals, and those tariffs after 90 days get reapplied, then I think there's going to be a real tricky situation going on, because essentially what a central bank's going to do at that point? Are they going to have to provide stimulus to the markets, because then growth forecasts are going to be absolutely shot? And if they do turn on those printers and print money, or, you know, they can try and reduce rates first. I mean, let's look at Switzerland as an example. They've cut rates significantly, but their currency is one of the strongest currencies at the moment. And that's not what they want to see. They don't want to see that right now. It was a problem a while ago. They started to cut to try and reduce sort of flows into the Swiss franc. They did it successfully for a period of time, and then this all blew up, and then all of a sudden, bam, you know, everyone wants the Swiss franc because of the lower interest rates. Now they're thinking of either intervening in the markets, or at least, you know, cutting further to try and you know, get rid of that Swissy strength. The only way I feel that Swiss franc strength is going to fade now is if we see some kind of negotiations coming back from it, and see some positive news between Trump and China. There are things under the surface that aren't great. I mean, unemployment claims coming in at 215k was quite funny. I don't know if you were watching the number at the time, but Forex Factory actually, quite funnily, actually printed it at 25k at first. And I was looking at the screen like, there is no way that unemployment claims were only 25,000. There was just no way. And then there's something must have happened in the back end, and they turned it into 215. But I thought that was quite funny. But yeah, you know, it's going to be, it's an interesting thing looking at the macro data at the moment. And we've got things like, you know, in the US, you've got essentially unemployment rising. You've got growth forecasts falling. You know, small businesses, bankruptcies are going up. So when you look at kind of the smaller level data and kind of look at across the data, it's actually looking a bit poorer for markets. We've had some big, actually, let me just bring this up. Let me go on to Q1 earnings. So this week we've had quite a bit when it comes in terms of earnings week in the US. So we had Goldman Sachs on Monday, Bank of America, Citigroup, Johnson & Johnson, Morgan Stanley, American Express, Blackstone are coming up today. The Taiwan Semiconductor, they actually posted decent earnings, to be honest. And we had some, so Netflix's aftermarket close before pre-market open, essentially, is what these mean here. But we've had quite a few recent kind of storylines coming out. I think one that I had was the United Health one. United Health plummets 19% after slashing guidance on soaring medical care costs. So United Health Group have actually slashed their potential earnings by 19%. or they've actually lost 19% in value. If we look at it from a day move, right? So this is what's going to be happening now for companies, is we're probably going to see, because of this cost of tariffs, earnings are going to come in a lot lower as well. So, what are the first thing that companies are going to do? The first thing that companies do is they fire people, or they get rid of people. They try and lower the labor costs, right? That's the first thing that companies turn to, right? Or one of the first things that companies turn to. So we're starting to see those kind of forecasts coming in. You've got even sort of banks that are looking at sort of their S&P 500 estimates have slashed completely. So I actually think it's pretty bad out there right now. We're just not necessarily seeing it reflected in the price. I mean, the money supply as well in the US is being tightening as well. And when there's less money supply, then there's going to be less growth. That's essentially tightening within the market. So I think the feelings at the moment is, on the ground, things aren't actually that good, and maybe tariffs at the minute are the excuse for the market to sell off. But if we start seeing things like unemployment rise, I still feel like that's going to be a story this year. Unemployment is going to have an impact at some point, and I think that's going to be the real sort of light to the ignition of the fuel of a potential move lower. Still, this probably isn't going to move aggressively lower in the next couple of weeks, but maybe we were looking at some seasonal forecasts, maybe around July. That could be the real kind of time that this really kicks off again. Good afternoon. So, no, he wants to fire Powell. Yeah, he does want to fire Powell. He wants to fire. Let's hope he doesn't. I mean, he doesn't technically. He can't legally do that. But I think let's be fair to Trump. What does he really care about rules? Does he really care about anything like that? So if he can find a way to change some legislation to get rid of Powell, I think he probably would. Whoever steps in at that point would be interesting. Maybe he wants Bessent in the role. He might have Bessent in the role. So because he's kind of like his economic guy, isn't he? And he is very knowledgeable about markets. He's very knowledgeable about the bond market as well. So I'm pretty sure Bessent was the one who went in after bonds started to fall off a cliff. He was the one that went in to say, we need to secure the bond market. So you need to do something because yields are rising and we don't want higher yields. So that's the whole kind of story of the game at the moment, isn't it? It's quite tricky trading conditions right now because I think, yes, the market is just waiting for clear catalysts. When I looked at my strength and weakness tool this week, there wasn't a huge amount going on. We had a look at some pound Swiss, euro pound. I quite like the idea of selling pounds. Basically, that's where my head's at right now, because I think that although the pound data recently has been pretty good, they're selling off against sort of your Aussie Kiwis. Swiss franc might be a little bit oversold now. I mean, we did get that kind of huge drop, and this is a very, very significant level in the markets. If I go to a monthly chart on pound Swiss, I've got data since 2002 here. That's very significant, right? So I think the pound Swiss trade might be a little bit oversold. However, I am watching this very closely because the market broke through that trend line support. We are pulling back at the moment. If we can stay below this 50 MA, and I think if we break trend on a lower time frame, I'm potentially going to look for a short here, very much in line with euro pound. If we get that kind of breakout of this kind of trend here, then I'm looking to go long euro pound up into 0.87. I like the idea of pound. If we think about it, what's happened recently is we've seen tax rises come in at the beginning of this month. So we're probably not going to, the data that we're getting out of the UK at the moment, if it can be trusted, for one, because I don't think the labour market data can be trusted in the UK. And, you know, if that can't be trusted, what other data can be? I think if you look at, again, well, you know, because I live in the UK, what I tend to do is just go out and have a look around. And, you know, I'll go out on a weekend and I'll go to pubs in my local area. You know, first thing I kind of ask bartenders is, have you been busy? You know, that's the one question I probably ask a lot of people is, you've been busy? You know, how's it been over the recent couple of weeks? And that's me trying to gauge sentiment of, are people out and about? Are people spending money in like pubs and restaurants and things like that? And if they are, then things probably aren't that bad. But if they say, oh, you know, it's been really quiet, actually, it's been, you know, it's probably been our worst month or whatever, or our worst week, you know, blah, 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 then, you know, something under the surface isn't particularly great. And I haven't seen that effect at the moment. I haven't seen that effect. But, you know, the UK has had some good weather recently, and good weather can mask everything and whatnot. So just a quick tip from me there, go out and speak to people, and you'll find out what's going on. But yeah, those are kind of my thoughts on sort of the pound at the moment. I think that obviously the tax situation, they've just recently increased taxes in the UK, and there's potential for Rachel Reeves to cut government spending. That's very restrictive. It's not shown in the data yet, so I still feel like I'm early in that narrative, and that's why I want to be looking at short pound in the meantime. Good, thank you, just nothing. Hope you're well too. Looks like Kiwi Swiss looks like it will reverse. Yeah, I mean, Kiwi's been a fairly strong currency at the moment. I will go talk about oil as well, because I actually cut that trade for a small loss in the end. There was good data out of the negotiations between Trump and China, just basically ruined that trade for me. So, you know, I've just kind of got rid of that one. But yeah, look, market is potentially breaking out here. This could be the first sign that the Swiss franc is starting to weaken and the market is favouring risk currencies at that point. So we'll keep an eye on that. But it can change so quickly. What I mean by that is, it just, the market these past couple of months have just been a bit erratic. Very hard to be able to kind of pinpoint something. Thoughts on the yen? My thoughts on the yen haven't really changed that much. I still feel like the yen will be a stronger currency. I'm very much favouring buying yen. I just haven't had the opportunity to get back into anything. One market that I did like was pound yen short, for obvious reasons, like what I'm talking about recently. And I was looking at this potential move down here. I've put a little marker on here. That's what I put in yesterday. I haven't physically positioned myself into this. I haven't taken a position, but, you know, look at this kind of structure at the moment. We had this retest of that 189.50. We broke trend here, which is why I was going to get short. Markets then pulled back. And, you know, what if we break this structure here to the downside? This could be potentially a good reason to start getting into something like pound yen, because I do feel like pound is that market for me right now. You know, and I still like the idea of buying Japanese yen. It's just, I think the market again is kind of on hold right now. It's on hold. One thing we've got to keep an eye on is also the $1 rate. I really like looking at this in terms of conditioning of where the US dollar could be positioning itself. Now, usually when dollar CNH rises, that's very positive US dollars across G10, G7. And at the moment, we're at this resistance level and we're selling off from here. So maybe we're still going to see some dollar downside because of this. And if we do, you know, dollar yen is more likely to break lower. We are coming into a very significant support point now. We've got this 140.50 level, which I think is the point where we've had obviously very aggressive buying coming in the past. Are those buyers that are willing to trade at 140.50 throughout 2024, are they going to be here in 2025? That's a question we need to ask ourselves. And if it does breach that, then it opens the room for some decent downside here. But at the same time, that's a huge level. That's a huge level. I expect some kind of rebound from here, maybe like back into the 145.50, you know, before seeing a bit of a push down, to be honest. Looking at the weekly chart, just starting to see those kind of slower weeks, and it's a short trading week this week, so maybe, and next week, so maybe we won't see any kind of aggressive moves for now in those type of markets. One market I really liked was dollar NOK short. I didn't take anything up here, which was silly of me, because I really like this market short. But now we're starting to break down again. We're starting to kind of trend lower here. So I am actively looking at dollar NOK shorts. The Norwegian data has been pretty good recently, and I like the idea of trading this market lower as well. So just keep an eye on that one in the background. I know some of you probably won't trade this market, but just keep an eye on it. I mean, we can kind of see what's going on with risk sentiment here. Aussie yen is just flat, right? And I think if we get an Aussie yen, we've got one of those sort of ascending triangles. If we get Aussie yen breaches to the upside, then I think that's going to be very positive risk assets, and we probably will see sort of a climb here. If we get that kind of failure and the market starts breaking lower again, that's a real good rule of thumb that the market's moving back to risk off. But that's the game we're playing at the moment. Risk on, risk off. You know, that is the kind of borderline that we're kind of teetering on right now. Although you can see the likes of kind of Kiwi CAD really starting to take off. Kiwi starting to be a real good performing asset at this current moment in time. Let's go flick over to, so a couple of trades I'm still in as well. So silver. This is where my stop loss is on silver now. I've bought that up into the $32 level, just in case, you know, we saw heavy selling again. I wanted to be protected, so I've put my stop loss just below this swing low here. Just see if we can take out 33. Take out 33, we're going up to 34, but if we don't, that's okay. You know, got the stop in place in profit, so that's good. Oil, I cut myself. I cut my trade. Now, technically, why did I cut the trade? So I was short at $61. Okay. Basically, underneath, it was kind of underneath this, or well, was this candle sort of close here. My stop loss was just above $65, I think it was. And this was, my trade was like, I was targeting $54. Now, this is a subject that I think is quite interesting to me. So I actually wrote a blog yesterday for the guys over at Trade Delicious, and I was talking about how cutting losses is near impossible for most traders, because we don't want to cut and realize the loss. We basically want to just hope and see if it changes. But for me, there was a couple of things and a couple of headlines that really kind of ruined. It did ruin the trade for me. So this candlestick here, okay, this kind of 4-hour candlestick, a headline came out saying headline was China ready to talk to the US, and that basically soothed a lot of the situation, or smoothed over a lot of the situation going on at the moment, because it was like, oh, actually China are ready to talk. Instead of this kind of tariff back and forth, China are willing to actually have the conversation. So that was one of the reasons why I wanted to stay short, was because of the fact that there could have been this back and forth between Trump and China, and if that's going to be the case, then global demand would be lower. So I wanted to short oil. Now, technically, I still want to be short oil. I just think getting short at 61 now seems a bit premature, and I want to be short around 67 anyway, in line with the kind of overall downward trend here. You can see how far we are away from the 50 daily moving average as well. So I think for me to try and get short in here, I was trying to see if there was still momentum to kind of get to the downside, but it wasn't there. Then that headline came out, and I was like, don't really like that anymore. And then if we look at the hourly chart, conditions started to change. And I always say that if conditions start to change, why are we still in that position, right? Now, if the conditions start to be more positive again, I can just get back in, right? I don't have to risk. So let's say this was a 1% trade, right? And you'd risked your 1% capital on this. Let's say you have a 50K account. So you got, let's say you got $500 on the line, right? Just for argument's sake. And your reason for getting in the trade was the fact that you had this nice resistance zone. We have the fact that, you know, although Trump put a 90-day pause on sort of tariffs, he was still keeping China's on. Obviously, China use a lot of oil. US produce a lot of oil as well. So if there was going to be a spat between the two, then global demand could decrease further. And I was liking the idea of potentially shorting that. And it started to go pretty well at first. We broke back below the hourly 50 moving average, which is something I like to see. You know, my first target would have been sort of 57.50. I probably would have took 50% off at that point and then move stops to break even. But what we had was the market then started to change conditions. So I left it a little while because we can get pullbacks in these moves, and the market was pulling back and we were getting higher highs and higher lows again. I thought, okay, I'll leave it. Then the market changed again, started to make a new low. So I was like, okay, everything's now starting to line back up. I'm fine with this. I'm in profit. But then we had that headline, and that kind of takes away one of my reasons of being short. Okay. The other reason as well was when I look at the commitment of trader report data, right, we are looking at an extreme. And you know my feelings about COT reports and extremes especially. I feel that extremes can lead to reversals. Okay. So when I look at the COT and I look at the reports here, I can see that if I just take off the small speculators there, we can actually see that for one, let me see if I can grab a tool, and I wonder if I could just pop that line on there. Let's see if I can change the settings of it, make it a bit thicker, turn that to red, and we'll do the same here, right? Okay, so when we look at the move here, so commercials, which are the green, which are the red line, sorry. Commercial are buying oil at very significant levels. So they've actually breached these previous highs that were back in 2024. So when they were buying heavily here, for instance, we had that little pullback. When they were buying heavily here, for instance, we had that pullback in the market. When they were buying heavily here, what did we have? Bit of a sideways market before a rally. Okay, so when we get to these extremes, I want to be looking at potential sort of reversals in oil prices. And I did discuss this slightly on Tuesday because we had a very nice weekly bullish sort of close there. And if we look back in history, when was the last time we really reached these levels before? It was back here in 2016, right? So, and what happened in 2016 was we had this really nice push up back into these weekly highs here, right? So we had commercials were buying at aggressive levels, non-commercials, live speculators were selling at aggressive levels, and we had this reversal form in the market. Is that the same thing that's going to happen here? Because when we look at it from a level point of view, right, it's actually a decent level. You can see big resistance, big support, big resistance, big support. You can argue that these are sort of support points as well. And we're at there again, that kind of $62 level. So in hindsight, I was looking at this with the idea of that kind of macro, I'll say macro, this market narrative was going to remain the same. And that condition changed. So why risk capital if the theory that I had was starting to fade, right? There was just no reason to risk any more capital on that. So I ended up just cutting the trade for a very minor loss. To be honest, I think it might have even been break even. Let me just have a quick look. If I can get to account history. I actually got out for a very small profit. So, and that says a lot, right? I was still technically in profit on the trade and I cut it. and then market rallied. So in my head, it was the right thing to do because the narrative started to shift. Okay, so look at that move there, and this kind of move that we've had recently is almost like a bit of a scared move in the market. That's what I'd like to say. You know, the market panicked here, and it panicked because it thought that this was going to be huge disruption. You know, but has it actually been that huge disruption that we expected? Arguably, you know, probably not. Now we've seen that Trump or China have opened talks with, or want to open talks, and with the US. So maybe we'll start to actually see a little bit of a pump back up towards sort of $70. You know, do I think we'll get back up into the 80s? You know, no, unless there's some real kind of deal between the US and China that actually gets released, then yeah, maybe we will see that kind of rise up. But yeah, looking at crude oil right now, I didn't like the short play that I had there. And it's quite funny because I actually wrote a blog about this as well. And the day after it was released, China come out and basically say they're going to deal with Trump. So if anything, I'm really good at spotting reversals. So especially this year. So that's why I kind of got out of that move in oil. Now, look, if anything kind of changes from here, let's say negotiations don't go very well and we start to see sort of oil come dumping again, then maybe, yeah, I'll try and get back into that move. But for now, I think that we're more likely to see further upside back into sort of 67. And then I'll be looking at the kind of overall trend then, because we are in that sort of downward trend. Is 67 going to be the point where we get that kind of bearish view come back in for oil prices? Hi, Barry. Hope you're well. So, yeah, I mean, that's what I'm kind of really looking for right now, is what's kind of shaping that narrative. So I managed to get out for a very small win. I'll take that, and I'll just be on my way with it. Silver, I'm still holding long, like I said. Stop loss is at $32 now. Just waiting to see if we get that continuation. Has the conditions changed here? Okay. This is something that I always try and ask myself is, even if I'm in a winning trade, losing trade, doesn't matter. Are the conditions the same? We have to try and get really systematic, and we have to try and think about what is going on. At the moment, market is making higher highs, higher and lows. And in my strategy, I stick with that. That's why I haven't closed this out. I want to try and see if it can break higher. If it breaks higher and it does this, I'm moving my stop loss up to the next higher low. And then if it continues, then I'm moving my stop to the next higher low, until it reaches a very significant point where I'm like, I want to get out of that, which might be around 35.50. But yeah, what's happening in this market? Well, gold's still going. Gold is still pushing up. It broke out of this sort of channel. You know, this is where I think there's an interesting conversation to be had as well. It's because who are buying gold? It's central banks. Central banks are buying gold at twice the level they were buying it back in 2022, right? They're doing so because they have actually lost sort of value in purchasing US debt, right? So the safety when in kind of times of uncertainty was buying US dollar debt, right? Which was buying US dollar bonds. And the reason for that was because obviously America's status as the world reserve currency. So people would be like, okay, the IOUs from America are safe. We will buy those debts. Now, we had the bond auction recently, which usually nobody cares about. Okay, I'll be honest. Nobody usually flags the bond auction as a point of interest when it comes to data. I mean, I'm pretty sure it's a yellow market. It's a yellow folder event. So if I just go here, apply filter, and we do this month. Let's get rid of these. Actually, I'll leave it as that for now, because I just want to see if it is actually anything other than a yellow folder event. So you'll see it'll come up, say, like 20-year, 10-year bond auction. Here you go, 10-year bond auction, you know, fell to ridiculous levels. 30-year bond auctions weren't great, and we also had the 20-year bond auctions, I think, at some point. Gone too far there. Can't see that. But yeah, you had the 30-year bonds, 10-year bond auction, and they basically weren't buying bonds. So who usually buys US debt where you have, you know, big holders of that? You've got Japan. I mean, China doesn't own that much anymore, but China will have some, emerging markets will have some, Europe will have some, right? Central banks would usually hold US dollar debt, but they're not doing that right now. And it's because of this tariff situation. And if they're not buying debt, then how are the US going to service their debts? You know, and that's the big problem. There's an argument that there's a huge, well, there is no argument. There is a huge debt crisis going on in the US right now. And many sort of central banks globally don't want to own dollars. So what do they own instead? Gold. They're buying gold instead. And this is why I think gold prices are going to be elevated. And let's say the stock market falls again, we will have a similar reaction to this. If the stock market tanks again, they will sell gold, right? Because this is the best performing asset. They will liquidate their positions here to service debts elsewhere, right? Even if they own some bonds, they might get rid of bonds as well, which might drive yields higher, again, to service some debts, right? That's essentially what's going on here in the gold market right now. Now, we know that gold and silver have a very strong correlation. So this is why I've been more focused on the silver side rather than the gold side, because honestly, I thought that silver might be less impacted by a sell-off than gold, but actually that wasn't to be the case, right? Because of that drop there that we saw, silver is a lot more vulnerable to that drop, which is why I'm keeping stop losses a little bit tighter on silver. But I just don't like the feeling of getting into gold right now. Just from a, you know, I just feel like, oh, you know, is it going to make that move? But once it's made that move, I'm more comfortable to go and trade a correlated asset like silver. So you're holding silver trade over the weekend? Yeah, absolutely. I'm fine with doing that. Stop losses are in place. Stop losses are locked in on profit. So yeah, I will, you know, even if it gets slipped here, I don't think it will be by much. And, you know, my entry was down towards $30. So I'm going to keep that on and see if we can kind of break back into this area here. We've got this nice resistance point at the moment. $33 was an area of resistance, support. It's acting as resistance right now. So, you know, what I would like to see is a break of that. And if we get a break of that, fantastic. If we don't get a break of that, I'll be stopped out. Okay. But the gold silver ratio is still rallying. And I still feel like this is going to be some point going to give us that rally in silver. But it's just when do we get that? I can't tell you when. I don't know when it's going to happen. If I did, I'd be betting the house on it, and, you know, but I don't. So we could move back up into the 110 level. I just think if we start getting into 2020 levels and the gold silver ratio, I definitely want to be involved with silver. Yeah, and I know I talked about this pretty much all year, but it's because silver's my best performing asset. I have not lost a trade on silver this year, which is remarkable, really. Because it's very rare that I get to say that I've traded an asset and not have a single losing trade on it. I think I've traded it like 8 or 9 times this year. But usually what happens with silver prices, like I said, when we get this gold silver ratio that is overextended and it starts to cut back, silver sort of explodes. And this is the kind of range that we've been playing recently. So when it comes to the high of the range, silver has a nice little rally. So you can see here, highs of the range, silver rallies. We got to the highs of the range here, silver rallies. we had to the highs of the range here, and I was buying these kind of dips. But now we've kind of extended that even further. So, you know, as this price moves higher, I think we are going to start to see more accumulation over into silver. And I think silver might continue that sort of drive. I do, you know, and the way I'm kind of looking at silver as well is, even if we do see sell-offs in the stock market and we see big moves down in silver like this, I think those for me are really good buying opportunities on silver. So if we get another, let's say, tank down to like 28, 27, and we still see the gold silver ratio being fairly high, I'm going to be looking to buy silver back at those points, because that to me is like, whoa, silver is cheap, and I want to be a buyer of it. Okay, so that's something that I would like to continue to do. I mean, looking at gold, gold is very overextended, right? Let's not beat around the bush about it. Look at the 50-day moving average and look how far price is away from that 50-day moving average. So at the moment, current day's 50 moving average is the $3,016, and we're trading nearly 10% above, or just over 10% above that moving average. And that's quite a big way, right? You know, we were at these kind of, you know, we haven't really actually seen, I don't think, it extend above the 50-day moving average by that much for a while. I mean, even here, it was like 6% on that day. So we are very overextended, I would say, at this point. I mean, I put a fib on here. I don't really use fibs that often, but I put a fib on here to kind of have a little look at maybe projected areas. This 3,000, I mean, I would be looking more at the $3,400 level, because I prefer using whole numbers and quarter numbers, half numbers and things like that on gold. But I'd probably be looking at this kind of either 75 or 34 to be the next kind of point that gold tests and potentially has a little bit of a drop from. So, I mean, we'll see. Gold has just been absolutely rampant, and it's because of this crisis that Trump has caused himself. People don't want to own US debt, so they are going elsewhere to buy, you know, debt, essentially. Maybe that's why the Japanese yen's doing so well. Maybe they're buying Japanese bonds instead. Right? You've got that reverse carry trade situation going on. Let's have a little look at 30-year bonds. 30-year bonds trading at 4.7, 10 years trading at 4.2, US 2 years trading at 3.7. So that is still, what's that? We're trading at 4.5% now in terms of interest rates. So we're coming off away from that. Nearly 75 basis points off of that. So the US 2-year yields are still pricing in cuts at the moment. So I want to see if this normalizes a little bit. Be nice to see if the normalization comes back in terms of the yields and things like dollar yen and whatnot, because we can use that to sort of predict where dollar yen could go next. But we shall see. And you can see that's reflected in the dollar, right? We've had yields spiking, but the dollar hasn't really changed. So that just shows you that money is outflowing from the US rather than inflowing into the US right now. But then you've got expectations of a higher inflation, and then you've got, you know, the tools from the central bank. What can they do? You know, they either can cut interest rates further, or they can start the printing machine again. I think if they start the printing machine to try and get growth going, that is inflationary. So, you know, we saw that in COVID, right? So COVID, they just started the printing machine, and then boom, you know, after 2020 happened, we had that huge rally in inflation in 2022. So that would happen again, right? No worries, right, guy. Catch you soon. So yeah, I mean, other than that, there's not really a lot going on. I can't really, you know, say much at the minute. I think the only other thing is that these markets are overextended. If we look at the dollar index compared to the 50-day moving average, at the moment we're trading 4.29% down from it. You know, when we look at this move here where we closed on 4th of March, the furthest point away we got 3% down before having a little bit of a pullback. You know, so maybe there's going to be some kind of reversal coming at some point for the US dollar, if it's not just for those that have been short to kind of realize some of those gains in the market, or we get something fundamentally that changes, that flips this dollar narrative around at the moment. Volatility is still kind of remaining at 30 as well. We've kind of just sideways moved. We dropped a little bit lower on the open, obviously, and we're kind of just trading between sort of 30 and 35 at the minute on the VIX. So, like I said, I don't think the VIX will make it back to 20. If it does, then that shows a completely different narrative in the market. And, you know, you're probably looking at stocks, you know, significantly higher at that point. NASDAQ, I mean, look at the Dow's down again today as well. So, yeah, really hard trading conditions right now. I wouldn't blame anybody for just trading with, I mean, I'm trading with a real low risk. I don't even think I'm risking like 0.2% on my trades at the moment, because just don't know. And I'd rather just let it all blow over. Might just, you know, the whole saying selling may go away, just go away for May, and then yeah. So I'm gonna leave it there, guys. Been running for about 52 minutes. Not a huge amount to talk about. Sorry about that. There's just kind of one narrative that is in the market at the moment, and it's whether that narrative is going to change or not. There has been some data out. I think the only thing, like I said, I like is pound short, and I'm going to be trying to stay on top of that. And see if there's any kind of opportunities around pound short. But other than that, there's not really much to do. So thanks for watching, guys. I appreciate your time. There won't be any live streams next week. I'm away next week, going on a little last minute trip down south. So I won't be here next week in terms of live streams. I'll still be putting out other content, sort of shorts and some long videos as well, just kind of sharing thoughts. So keep an eye out for those, and hopefully we have a good end of the week. So cheers, guys. Appreciate you all, and I'll speak to you all very, very soon.